Hello, hello, hello. Happy Tariff Tuesday. How's everyone doing today? Good morning, Sterling. Good morning, Patrick. You know, I'm it's all, I can't, I know that that's what they're saying, but it's all about fentanyl. You're putting 25% tariffs on Canada and Mexico just because of fentanyl. Fentanyl, very bad thing, don't get me wrong, but it seems something's off with that. Good morning, Heinrich. Good morning. Good morning. Who else is here? Good morning. Yes, Tariff Tuesday, David. Let me see. I'm scrolling through things. Thank you for putting in all. They think tariff manufacturers will eat the tariffs. I disagree. They're being very optimistic with that. Target, we had earnings. Target was a beat. Good morning, Anissa. Best Buy was a beat. Guidance was not great on Target or Best Buy. Thanks for putting that in there. That's why they're trading down. What else? Good morning, Jacob. AutoZone was a miss. Some of these other ones I don't really need to go into. Hello, Charles. Boy, I might just had a sorry. I've been up since 2:30 in the morning. Already been to the airport and back with the wife for her first flight out. First flight out of Sky Harbor. So it's been a long day already. Good morning, Daniel. Good morning, Ted. Sorry if I'm a little off. I'm still drinking green tea. Just doesn't have a kick when you're up at 2:30 in the morning. Good morning, Royal Palms. So, what else? Good morning, John. All right, let's just get to the markets then. Let's just get to the markets again. I appreciate everyone tuning in. I don't know, the feed on X isn't working again. My X account is screwed up again. Oh boy. Oh boy. Dollar index. Yes, dollar index is falling. All right. Yesterday, by the way, I told you to keep an eye on this. Look at manufacturing prices. Huge jump in manufacturing prices. Look at the employment. Drop in the employment, huge jump in prices. So, again, another thing that's pointing now. Here's what I'm worried about because I think the markets are really pricing in a recession now. And what's interesting is a recession is not just disinflationary normally, but deflationary. But here's the deal. If you don't get stuff like, I think you're going to see hit or miss disinflation. Hit or miss. Some things are gonna, some things are not. And it's going to be real interesting. I know they're counting on all these countries eating the tariffs. I don't think it's going to happen. Some might, a little bit might, but I think they're being overly optimistic. It's going to be interesting to see how long these are put in place for. All right, today we had Redbook coming out. Redbook's still holding in there, 6.6%. We have the RCM TP Tip Economic Optimism Index expected to bounce a little. That's really not going to move the markets. We got Fed Williams speaking in the afternoon. But it's a very quiet day today. So far, it's not quiet for the mega caps. The mega caps still, I'm surprised just as how Apple is holding up. Maybe that's just their buyback program. But did you hear like their complete integration with AI for Siri is now like going to take till 2027? Apple's turning into a joke under Tim Cook. I'm sorry. So that's where we sit. A lot of red across the board. If we look at the groups, let's see if everything's negative. Now you have basic materials and utilities only slightly negative, but everything's negative today going into the open. Fed Watch still has the first cut in June. But May is now up in the air. Again, the market's really starting to price in, hey, we're heading into recession, and Fed's got to start cutting. So Fed's going to be between a rock and a hard place. So that's going to be very interesting. Fear and greed still an extreme fear. Now, at some point, we're going to get something's going to trigger. We're going to get a snapback rally. But even with the snapback rally, it's got a heavy lifting strong again. Thanks for putting in target Best Buy and AutoZone. Again, AutoZone, people are cutting back. People are really starting to cut back. So, good morning, Andrea. Thank you for tuning in. What else? The crude can't sustain a rally, very choppy, especially on 5 minute. I've not looked at a 5 minute crude chart in quite some time. I do not go off crude on 5 minutes, but we can look. I mean, crude's also. Crude overall, again, we've been breaking down finally into this area I've been watching for it to return to. Now, there's no bottoming pattern in any rallies. I mean, the last little blip into the rotation zone, rotation down, because crude is in, if you look at this, it's in technically now bearish mode. I'm not really paying attention. It's a consolidation on the weekly, but on the daily, it's definitely in bearish mode. Going to be watching for it to, even on rallies, to then sell off and retest this at least 66 level. Now, back to the S&P. Again, very bearish day yesterday. Huge outside key reversal day. They even closed below Thursday's lows. So the little window dressing day to wrap up February wiped out completely yesterday. And so far, the S&P, again, retesting its 200 and retesting critical support. This is critical support. Look at this. We're even below now. We've wiped out the whole November Trump rally, election rally. We're now holding the key support. So this was a prior resistance area from July and in August, retested with key support beginning of October, the beginning of November, and then the middle of January. Now we're retesting it again. Every time you retest a level, it softens it up. So, would not be surprised to see something come out that triggers some kind of bounce. But if this really breaks with some momentum, watch out. Also, 58.09 for the massive potential weekly double top, which was still valid. Have we traded below 58.09 yet? The low 58.12. So this has not been confirmed yet. All right. Now, would I be, based off of weekly cycles getting to the bottom, daily cycles not been able to get any traction, even if this does confirm and trigger on a daily, I would not be aggressively getting into it. I'd be waiting for it to bounce. In my book, at this point, you got to get above. On any bounce, we got to get above 6,033 to sustain anything to even retest the high area. So as I said, I'm in neutral still. If this triggers on the weekly, then I'll be in bearish on the weekly along with the rotation zone. It's still technically in neutral, hanging on the weekly. Daily's been in bearish. And you see these spikes in the rotation zones are getting sold. So today, very, very key support down where we're trading. This 58.09 to 58.15 area we've bounced off. Of. This is technically a little mini double. So for me to all get into bounce mode, I need at least, let's take a look at this on the 1 hour. It is completely valid on the 1 hour, a rounded double. So there you go. I'd at least need a close of about 58.84 on a 1 hour, followed through by a close on the 4 hour above that same level. So as we've talked about, people ask, well, what if it confirms but doesn't trigger? This is, again, if it comes up here, let's say something comes out, we're in oversold conditions, we get the bounce. If it starts bouncing with momentum, yeah, this could be front run, but the only way I'd hold it is if it followed through first with a 1 hour close and then has to follow through with a 4 hour close. The targets on that, interesting enough, is a prior key level. I was watching 59.15 is the first level, is the first target, just happens to line up with that 59.15 level. Then we got 59.30 roughly, then we got 59.46. Just in front of the other key level we were watching, or at least I was watching. So that's the only bullish setup. Until that until that were to trigger the declining rotation zone, minor resistance into the open that it has to overcome is this 58, 57, 58, 56 area. And then you have the declining 4-hour rotation zone. Okay? Right in front of the trigger of the double. And by the way, this little double, if it were to trigger, look where it takes it back to. The daily rotation zone, where we've gotten selling pressure back on Wednesday, Thursday, and yesterday. All right. Thank you, Patrick. Thank you. What was this? Emotional sell-off. Yesterday's low was Great Wall of China, huh? Bitcoin turned into a meme coin thanks to Trump. Are you not a Trump fan, Coco? Coco, are we still going NASDAQ 24, 25, or are we now in Trump's tank going to tank the markets? I just got to get on the same page with you, Coco. We need a Coco update. So, again, the NASDAQ doesn't strictly obey the 200 because it could chop around, but this, in order for me to get anything more bullish, it has to at least regain the 200 and regain 20,900. In order for me to start watching for a retest of high areas, then we got to fall through above 21,548. Now we're trading at a very key support area. We have a support zone right here. Not like auto zone. This would be like a support zone. So we're between roughly about 20,200 to 20,300 is the key support zone. You start losing, really, it takes me to get below 20,165 to really get into short-term, more aggressively bearish mode, because that's the 50% retracement from the run-up from August lows to December highs. So there's a fair amount of support in here still. And we are getting some potential divergences unless we get a flush out move. Where do we stand with Elliott waves? We're at very key topping areas on the longer term waves. This is very key. We have a lot of, you still have to mark sell signals in place too. So that's why, again, just from the stuff that I announce on this is breaking down. We'll probably shift to bearish mode on the weekly, and it's bearish mode on the daily. So that doesn't, again, we can have very key rallies in this, but they have to move pretty bigly to sustain something and really get back to where buy the dip will start making sense again. Right now, very major resistance is 20,900. Okay, but going in shorter term, we do still remember how you measure it. You come down here from the peak to the base, and as long as this doesn't trade below 20,248, the double is still in play. The potential double, I should say. So you have a potential double also in the NASDAQ. All right, and if you look at the 4-hour, that's right where the rotation zone is. Before we get there, there's pretty significant resistance right at 20,475. And then the trigger point for the double is a 1-hour close above 20,592, followed by a 4-hour close. Those targets, 20,740 roughly, 20,795, and I pay attention especially to the two first targets if that were to trigger, and then 20,868. You're no longer bullish with Trump? Maybe we see the biggest crash in history. Wouldn't that be something? I'd really like these markets to get back to more sensible valuations. I wouldn't mind the biggest crash in history. So, The Dow, Dow. You still technically have. I'd go if this right side holds up. I use the other side of the harmonics for the projection, but at this point we don't know if it's going to make a new low yet. So at this point the trigger on the Dow mini potential double is 43,358. 43,545, 43,636, 43,728 are the targets to the upside. Right now, the Dow, I'm watching today if we close below 43,190, because that would shift the probabilities lower back to retest the lows from the middle of January. Keep in mind, I expect the Dow to reconnect with its 200 over the next few days at some point. The Russell, there is no, again, the Russell's not anything I'm looking. Now, we will get bounce plays in the Russells, but the Russell's the last thing I'm looking for in bounce plays. The Russell looks just like trash. We will get bounces in the Russell. Key resistance still, 2112. We're trading a key support, 2079. If that breaks, you don't have much back down to about 20,036 to 2036 to 2042 is the next major level. The VIX, with yesterday's price action, now falling through today above the 24 level, this is where we are in potential. We could get a flush down move before we get the bounce, but we don't have the flush down move. This has been pretty orderly selling. So I am on alert if we get a momentum break, unless we trigger those doubles. The DAX, pretty big reversal also. So you have Monday's big run up, which remember invalidated the potential double top. This is key. What I'm still watching for on a closing basis, I'll shift in the DAX because we have substantial divergences here if we start closing below 22,300. Then I'll start watching for the bigger pullback, at least into the weekly rotation zone. The notes. We got to flip this around because the notes actually, again, this is really looking like this isn't based off of no inflation. This is based off of we're going to tip into a recession with everything. And now above the highs from December. So what's that look like on the yield basis? The yield right at the early December lows. And we're in a potentially bottoming zone in here. The key thing for the yield, though, is 4.018. Other than that, we'll be watching for at least, we don't have anything yet, at least a short-term potential bounce play back into the rotation zone before possibly setting up a stronger double. But this is really pricing in a significant recession, if you ask me. Dollar index. Dollar index had broken below the support base from last week and now back above it. So we're going to have to see if it can at least get in some kind of bottoming move here. I'm actually surprised with the weakness. See, the recession weakness is trumpeting even the tariffs. So, but is there any setup that I'm looking at from the long side just yet? No. Crude, we already talked about, still watching for it to come lower before really making possibly at least a short-term bottoming move. There isn't anything yet. There isn't anything yet because even on a little bounce play, we have the declining 4-hour rotation zone, and key resistance now is back down to 68.50. Very key resistance area. Gold. Nice 2-day recovery, backing off a bit. I'm watching today to see if we close above the 62.5. But gold, yes, has been volatile, but it's reset with the weekly rotation zone. So the only thing that I'm still watching for is if we close below last week's If we close below last week's low close, then I'll watch for the bigger pullback closer to 27.82. Until that happens, if we go above 29.25 on a closing basis, then I'm going to be watching for this to hold up or consolidate more. Yen still grinding its way down. No bullish setup yet. So in the rotation zone, clear rotation back down. And now trading significantly below last week's support and the prior major support from December. So my key thing to watch next is 146.80. Let's take a look at the spiders. The spiders on any bullish play, since if the futures trigger the double, then I'd be watching for more of the rally in the spiders. But on first key level is back to the gap from the gap fill from yesterday, 583.77, and then we hit very key resistance level at about 585. Above there, this is where I'll just use my harmonics. 588 would be my next level up. To the downside, the support level, this is coming down a bit to the prior major reversal gap open of 575.77 area. That's the next key support. Between there's not much other support in there. There's not much other support until you get down to that key reversal. Minor into the open, you're looking at about 578.30. The Qs, which still did have, the Qs did have a weekly double. The weekly double, again, this is a weekly pattern. You can see it here. It's been confirmed on the daily and technically triggered on the daily, but I needed to follow through with a weekly close below the lows for mid-January. But that has been confirmed. Okay, and it's coming in close to the 200. So I'm going to be, again, is there a bounce play yet? No. But if those little mini doubles trigger, then the first thing would be to yesterday's close target level of 537.23, and then major resistance for, hold on, I said 497.05. 497.05 is the first target, and then major resistance coming in just above 500. Bitcoin, interestingly enough. So remember, we confirmed a double, and because of the strategic Bitcoin reserve announcement, we did not officially trigger the double on the weekly. But look where we're trading now. Yesterday was wiped out the announcement, and now we're trading below that. I hope the person trading at 50 times leverage that front run that, I hope they were taking profits yesterday, because we're trading below that level. And we could still see lower price action in Bitcoin, but there's no telling based off of Trump, based off the Trump effect. So, I'm just looking at some of these comments. All right. All right, we also have Ethereum just Ethereum just trading below. Look at this, Ethereum trading below the September support base. Ethereum's really breaking down. What else? We have Tesla. These mega caps are really shifting. Tesla still, the key on the closing is this 269 area to watch for. That doesn't mean it's going to just tank, but that means that shifts the probabilities back down to retesting 182.50 area. NVIDIA, another one, not able to sustain anything. NVIDIA is definitely shifting. Also, two rallies are being sold. Even intraday rallies are being sold. Yesterday, Friday bounce. Yesterday, just completely reversing that and getting potentially the lowest close back since September with another gap down. So this is really getting sold too. Broadcom breaking down. Now remember, Broadcom's earnings are on Thursday, but Broadcom's definitely looking like it's going to try to reconnect with its 200 and into a very key support base. If that is lost, then uh-oh. So things definitely shifting with the mega caps. Lots of selling pressure on the mega caps. Look at, again, Amazon into the rotation zone, selling, into the rotation zone, selling. Going to look like it's going to reconnect with its 200, possibly today. And remember, it triggered the wedge pattern, and the wedge full target is down here at this black line. So we're going to have to see how that works out. Microsoft trading at very key support levels. This is possibly right now with the gap down. If this does not regain the support level, we could then really start watching for rollover plays in Microsoft. And think about this. Microsoft is still trading at a 32, roughly a 32 PE. So this isn't even cheap fundamentally yet. I think if this selling pressure continues, we could easily see Microsoft back to 340 in the next few weeks. All right, let's peek at the open. Oh, you got another little mini double on a 5-minute chart. Look where that is. Look at that. So that's what I'll be watching off into the open to see if we trigger that, then possibly run into that bigger pattern. Other than that, remember, this is very critical support. How did the tick open, though? Let's see. All right, below minus 1,000. So I need to see, in order for me to get at all bullish, I need to see the tick to recover and to trigger this little mini double. Other than that, if this resistance holds at this 58.33 area, then I'll be watching for a retest of these lows and possible break in that, and possibly a flush out move. MO looking to break out of major weekly resistance area. Yep. Oh, another play. I want to share another play. Let me know if anybody wants to see another thing, if you want to research it. You want to see another thing? Not a sexy stock, but look at this. Look at this. General Mills. Why am I keeping a very close eye? It had a % B buy back on the 19th of February. It's now set up with a sloppy inverse head and shoulders. Okay? The PE, 13.19. The dividend yield, 3.87. So you still can collect a pretty decent dividend. Now, it is popping to very key resistance. That's the only thing that's risky, a little risky on this. However, look at where it's finding support. This is a major support base going all the way back to 21. So you see how 19, that was very key resistance. It broke through on 20, retested in 21. We're holding a very key support base. Decent, very decent PE, still an okay dividend yield, triggering some shorter term patterns. So this is one you might want to watch, especially if you're looking for something that pays a dividend. Keep this one in mind. So there's another one you might, again, not a sexy stock. It's definitely not Palantir. Vertical up, vertical down. Finally filled the gap. But look, I'd rather be looking at things like MO, like GIS. Get into some of these safer plays, good valuations that pay a dividend if you're looking for stuff longer term, and stop fixating on what's been leading right now, or what was leading up until now. So, OKTA, you want me to check out OKTA, Coco? Yep. I'm just looking at that longer term. I was looking at this the other day for some reason, and now I don't remember why. But this one could easily, this one is against some pretty decent resistance, but it could get a pop back to, it ticked off. Now this went vertical up, vertical down, and it ticked off the 87.5, and looking like it's trying to build a little stronger base here. But in order for me to get anything more bullish besides getting back to the 200 and this prior resistance, but it came back down, vertical up, vertical down, finished the 87.5 rule, and now is trying to slowly grind up. But again, is this a long-term thing for me? This would just be a strategic little pop play. I was looking at that to the upside, potentially, if it can get above this 100 mark. Other than that, right now with this gap up today, if this were to trade back below 86, again, I'd be back in kiss it goodbye mode. All right. I hope everyone has a wonderful day. I hope you can. Thanks for throwing out MO. And hope everybody will take a look if you're interested in stocks from a longer term perspective, potentially GIS, and do your own research. Again, not a trade recommendation, but something I've been keeping a very close eye on. With that, I shall see everyone tomorrow. Bye for now.